Okay, very good morning, guys. Welcome to the briefing for Tuesday the 16th of August. Just taking a quick recap firstly on yesterday. Very quiet. You had the Assumption Day holidays in much of mainland Europe, which although the markets were open in Europe, not many traders were at their desks, and hence in terms of S&P range, if you like, on a percentage basis, it was pretty much half of what we've seen over the course of 2016 as a whole. One of the bigger movers, as has been the case of late, has been crude oil. Just taking a look at that on the charts here on the top left, you can see we've seen a bit of a push here in around 40 cents in the last 15 minutes or so. As I said at the time, nothing headline driven, but we'll get into the dollar shortly. But the dollar index is getting hit pretty hard this morning. We've had a couple of dovish sounding Fed comments from overnight, an FOMC voter, Powell. The dollar is actually down around 0.66% in the dollar index. We've just fallen through 95, and we're below where we were on the weaker retail sales report low that we printed at the end of last week. So additionally then, both major pairs in positive territory. Euro dollar seeing a little bit of outperformance here, up around 80 pips, but cable also positive. For cable as well, cable has fallen for 8 days in a row now. That sequence of falls last extended to 9 days. You'd have to go back to the 5th of September of 2008 if we were to see another down day in cable. But oil, we did see a big move yesterday, fairly decent size. From around the lows that we had in the morning up until the eventual highs, it's around a 3.5% gain in crude. Again, continued verbal intervention, so to speak, from the likes of Russia in particular. The energy minister talking about potentially speaking with the Saudis, looking to find a solution to stabilize the market, is the way that they're wording it. So net, trying to talk up prices, and it seems to be paying dividend at this point. I think, though, if you remember back, the market was left very disappointed back in the spring after similar, what they call jawboning, is when they just continued to talk up the market, but did they actually take action? Well, if history is anything to go by, likelihood then this meeting, which we're set to have in September on the sidelines of an energy conference ahead of their main OPEC scheduled event in November, is likely not to see any action. In fact, there were some comments out of the Nigerian oil minister overnight saying that there was no way going to be any type of cut to production. Nonetheless, though, oil taking a bit of a bid here. I guess technically, just looking at, we're not far from yesterday's high that was seen after the NYMEX pit close. That was up at 45.93, so within around 4 or 5 cents of that now. And then obviously eyeing the 46 handle on the upside. Obviously, this comes in the wake of that big push lower that we had from kind of June time when we were kind of sitting around the $50 level. That was when that US output kind of came into play. And then we had that big quick move lower at the end of July before we bottomed out sub 40 at the beginning of August, but then a very aggressive rally's been seen since that point. We did have the Genscape numbers yesterday, the first insight into the inventories for this week, and they did of course show a drawdown of 350,000, so that also, although fairly small number, slightly more supportive of prices as well, and that of course comes ahead of the API and DOEs later. The one thing though, given the quiet calendar that oil has been able to do, is really give US equity markets a further boost. All-time highs once again, I believe across all three indices, but the S&P around the European cash close, the new all-time high now seen at 21.1975. We have tracked below pivot this morning and found a bit of initial support around S1. But there's going to be a little bit more on the calendar to watch today, which could make things interesting again. We were talking yesterday in the chat about, will we test 2200 for the first time ever this week? I certainly think that could well be the case. Today could even be the catalyst, given we have some important inflation data coming out of the US. One of the other charts I just wanted to share with you as well, which has been fairly significant at these current price levels, is the Japanese yen. First of all, just wanted to highlight this particular area of the dollar yen chart, as you can see that I've circled. That was when the Bank of Japan tried to counter the strengthening currency at the time. This was around these type of 116, 117 levels. As you know, the stronger the currency, the more it kind of impedes their export names and hurts their domestic stock index, the Nikkei 225. Well, this was when the Bank of Japan took the unprecedented step of taking interest rates into negative territory for the first time. That was that pop higher. But look at the move that we've seen since that point in time. From here all the way down, yen continuing to strengthen, just with some of the general global uncertainties present in the market and a lot of questioning over the BOJ's ability to actually have effective monetary policy. The reason why I'm pointing this out this morning is because we're back at the psychological 100 level. And 100 is seen by many as the kind of line in the sand in which the Bank of Japan starts to get a bit more vocal about checking rates or intonating towards potential intervention. Now, given the thin liquidity we're accustomed to around this time in the month of August, if they were to intervene to any size of degree, you've got to be careful if you're shorting dollar yen of potential large, fast spikes that could appear on the way down as they look to counter that trend. Obviously below there, if we do make a concerted effort to move below 100, we'll then be eyeing the post-Brexit low. That's what you can see there marked up at 98.71 in dollar yen. But obviously the lower that goes, the more signs and more verbal intervention, like with OPEC in oil at the moment and Russia, you're probably going to hear a lot of the Japanese finance ministers, the government promising potentially more fiscal measures, the BOJ that they can do more, the usual jawboning will likely come to the fore again. A quick look though at the dollar this morning. We are getting under quite a bit of pressure. There were some comments overnight from Fed's Powell, who typically is more known as a hawk and isn't a voter on the FOMC. Now, Powell has said that there's an increasing risk that the US economy has become trapped in a prolonged period of subdued growth that requires lower official rates than previously expected. Said he was not in a hurry to lift rates, arguing a very gradual path for any rises, while warning the US outlook still was dogged by global risks. So this is a guy who typically tends to err on the more hawkish side, being quite extremely dovish really, and that's being evident in the dollar selling this morning. As soon as Europe's come in, sell button pushed, dollar index sub 95 now and down nearly 0.7% already this morning. That's a pretty large move. And hence major pairs, euro dollar cable, as I said, continuing to push to the upside here. The one thing though that I would keep an eye on in cable today is a fairly significant session for the UK for a number of reasons. Technically, one, although we're moving higher on the back of the weaker dollar, we have moved down sub 129 both overnight and this morning, and that does put into sight now the post-Brexit low that was seen at 128.06. So that line is a key level of significance psychologically. That was the July 6th, I think it was, low that was printed a few days after the vote to leave the EU. Now today is important because we get inflation readings. And obviously this is what the Bank of England's MPC, their Monetary Policy Committee, is going to be watching closely. They've already promised us potentially further cuts to rates, but how aggressive they'll be in any broader push to do that quicker or use other stimulus to prop up the economy, such as further or more expanded QE, is dependent on readings like inflation. And as you can see here, this is inflation in the UK tracking 0.5% year on year. Remember, the Bank of England's target is 2%. And given the sharp depreciation of around 12% in sterling post-Brexit, we'll be looking out for any inflationary signs that's coming into just general prices into the UK. Deutsche Bank, though, this morning, if you read the Jim Reed note, saying that it may be a little bit early to see that feed through, but it'll be interesting to see whether we get many clues. The other important event, of course, as well for the UK is later on this afternoon at 2:45. Although we don't predominantly trade gilts here at Amplify, if the yield curve moves substantially enough, then that will start to grab wider attention and could well influence other markets. Particularly if you're trading the Bund and also sterling currency. You've got the gilt buyback from the Bank of England, and later this afternoon they're looking to buy back 15-year plus maturities, of which, if you remember, last week got a lot of attention because it was the second operation in the latest QE round and it failed, i.e. it failed to get a 1-for-1 bid or offer cover ratio. So that's something as well to keep a very sharp eye on later. A few other points of note from news that I have seen overnight, which are probably just worth quickly recapping. Warren Buffett, his firm Berkshire Hathaway, have increased their headline making stake in Apple in the second quarter from 1.1 billion to 1.5 billion at the end of June. Now, you might have read in a lot of newspapers this morning a lot of hedge funds talking about their positions in various firms. That's because of a period in the year called 13F filings, which happens at the end of every corporate earnings season. It's when essentially funds must be transparent with any changes of holdings that they have in various firms. And so this is a time where single stock equity traders, or even index futures traders, if a stock like Apple is so large it can move the index, they'll look at the substantial funds and how they're moving their cash into certain either single stocks or sectors. And Warren Buffett, being such a heavy hitter, him doubling his stake in Apple is a very good sign for Apple themselves, because they've obviously been under the cosh, so to speak, giving slowing demand in China, less appetite for their iPhone sales, which have been decreasing, because Warren Buffett tends to invest in consumer discretionary stocks and over a long time period. So that's a real sign of confidence in the stock if someone like him is investing and doubling up his stake almost. So some good news for Apple in what's otherwise been a fairly negative period for them of late. Looking at some of the other numbers to be aware of today, some significant ones to be aware of, one being the German ZEW economic sentiment. That comes out at 10 a.m. this morning. Any Euro traders, Bund traders, DAX, be aware of this figure. Again, just to recap, this is the index measuring the level of optimism that analysts have about current economic situation and expected developments for the next 6 months. And don't need to go far to see why that last reading in July was so weak. Obviously, this was the uncertainty about the Brexit vote's consequences for the German economy. So people very, very nervous in this last reading. In fact, it was much weaker than expected and was the lowest reading since November of 2012 for the German ZEW last time round. So it's going to be very interesting to see whether their confidence in the outlook for the next half a year has now improved. Now we've started to see what action the Bank of England have taken, that triple package to support the economy. Is that enough for investors in Germany to have confidence over their own economy in the near future? So that's coming out at 10 o'clock. That will be a market mover to keep an eye on. Remember as well, volumes will be better now much of the European market are back from that holiday from yesterday. It also gets interesting this afternoon, because then we start looking out for the US CPI reading. Now, CPI report for July takes on elevated significance given the Fed's focus on their inflation mandate. Let me just read you this short snippet from Deutsche Bank. They've said, recall that when the FOMC raised interest rates last December, it inserted an important phrase into its meeting statement. They said, quote, in light of the current shortfall of inflation from 2%, the committee will carefully monitor actual and expected progress towards its inflation goal. So with the labour market very close to meeting its maximum employment mandate, the Fed is emphasising its inflation goal as a litmus test for further steps toward normalisation. So thus, while market participants will focus on the August employment report with respect to gauging the prospects of further rate increases this year, obviously we saw non-farms, of course, was very strong. That's 2 months of consistently strong payrolls. It is important to remember that inflation will be a key determinant of the pace in which the Fed proceeds with policy normalisation. Remember, as I've been stressing for some time, it's not just about jobs. It's about inflation as well, which is part of the dual mandate of the Fed. So this is certainly something to keep a very close eye on this afternoon. You can see we've been tracking fairly consistent here at 0.2%. More recently on the month-to-month basis, but we've never got over 0.4 so far this year in 2016. Their target, of course, is 2%. Now, one final point, we have had some comments out of another Fed member, the head of the San Francisco Fed overnight in the FT, you might have read in your morning research, talking about central banks need to consider aiming for a higher inflation target to boost the room for manoeuvre in the context of sluggish economic environment. If you think about it, not any central bank is anywhere really near their inflation target. So what is the point of having it 2%? We're in this new world of economic low growth environment. So John Williams of the San Francisco Fed saying that a higher inflation target would imply a higher average level of interest rates and therefore give monetary policy more room to maneuver. So just interesting to see that a lot of this kind of current policy framework that has obviously been the textbook norm for many years, these sorts of things don't start to apply when you're in a new environment of ever increasingly low interest rates in negative territory, which obviously has not occurred before. Do we now need to start looking at the policy frameworks of these central banks to adapt? Another interesting point that the Fed official was making is that another way of looking at this is it time for politicians to institute a more active role for budgetary policy in stimulating the economy? For example, by automatically varying tax and spending plans in line with the economic cycle. There starts to be more and more calls about there are limits to what monetary policy can and indeed should do. And certainly that's a line that's getting more vocalized by central bankers as time goes on. Okay guys, that pretty much concludes the wrap for this morning. So quite a few data points to look out for today. You've got the UK data key, that's coming out in around half an hour's time. You've got the German ZEW survey 10 a.m. You've got US inflation readings at 1:30. You've also got housing starts and building permits and industrial production all this afternoon from the US. So hopefully should be able to shake out of this August lull, see a bit more activity. Obviously keep an eye on cable, although it's moving higher at the moment. That downside level of the post-Brexit lows getting ever closer. Dollar yen as well, watch that 100 level. I'm expecting to see that fairly well protected at this point. So be mindful of any price spikes around this 100 level. And then obviously that 21.90 3/4 marks your new all-time high for the SPOOS. Okay guys, catch you in the chat and enjoy your trading day. Thank you.